$3.7 billion for a glass manufacturer. I'm telling you, Apollo is betting on a massive infrastructure supercycle.
Oh, please. You always want a grand macro thesis. They bought Nippon Sheet Glass because the yen is in the basement and the assets were deeply discounted.
I refuse to let your spreadsheet ruin my narrative. But fine, if you want a real premium, Google is dropping $32 billion in cash for Wiz.
That's a staggering multiple. I just want to know how regulators are actually going to swallow it. The rundown.
$32 billion, all cash. I just want to pause and appreciate the sheer weight of that term sheet.
It's a massive exit for Wiz, but honestly, I'm immediately looking at the antitrust risk. Google says they expect it to close this year, which feels wildly optimistic. Regulators are blocking tech deals a tenth of this size.
Oh, come on, Maya. Cybersecurity is completely fragmented. There's no real monopoly play here. This is pure cloud infrastructure defense. Google needs this to catch up with Microsoft.
Try explaining cloud infrastructure defense to the FTC right now. They don't care about the tech nuance, they care about the headline. I'll bet you a very expensive coffee this drags well into next spring.
Deal. I like those odds. But while Google drops $32 billion, the rest of the world is playing small ball. Grab is picking up Foodpanda's Taiwan business for $600 million.
Which completely tracks with that new EY report. Southeast Asia is pivoting hard right now. It's all minority stakes and cautious bolt-ons. Mega deals are practically dead in that region.
Dead is a strong word, but yeah, buyers are definitely taking a breather. Speaking of niche bolt-ons, you actually flagged this Veolia deal this morning.
I did. 220 million Australian dollars for a major soil remediation player down there.
Dirt. They bought dirt cleaners.
They bought PFAS treatment capabilities, Nate. Forever Chemicals. The regulatory liability around PFAS is exploding globally right now. Buying the specific tech to clean it up is probably the smartest defensive M&A play I've seen all month.
Okay, I see the angle. Very ESG, very compliant. Still not quite as fun as Blackstone evaluating a stake in the Global Cricket League.
Wait, really? Private equity in cricket?
Rumors are swirling as of this morning. Just imagine the pitch deck. Wickets, massive broadcasting rights, over 1 billion fans.
I can't wait to see how they structure the carried interest on a cricket franchise.
Right? But if you want a massive private equity buyout, we actually have definitive agreements for. Apollo just woke up and dropped $3.7 billion on a glass company.
Nippon Sheet Glass. The enterprise value on this is fascinating, especially when you dig into the debt structure Apollo is taking on to make it happen. The big one.
$32 billion in cash? I just need to say that out loud so my brain can actually process it.
It's a completely ridiculous number. Google buying Wiz for $32 billion is the kind of flex that makes antitrust regulators spontaneously combust.
You know, some junior analyst at Alphabet had to double-check the wire transfer limit on their corporate checking account. It's the biggest all-cash tech deal ever.
They have the cash. But what fascinates me is the timing. I was reading that new Equitech report on global buyers. It explicitly says everyone is getting way more cautious with AI and tech targets right now. Everyone else is doing careful diligence, balancing enthusiasm with actual math, and Google just drops a GDP-sized bag of cash on the table.
Because they have to, Maya. It's defensive. Microsoft is eating their lunch in enterprise cloud security. Wiz gives them instant credibility. $32 billion is just the cover charge for the VIP room.
A $32 billion cover charge? Please. Wiz was valued at $12 billion 5 minutes ago. Paying a $20 billion premium isn't strategy, it's panic.
I strongly disagree. It's a moat. You can't put a price on not getting hacked.
Oh, I'm pretty sure Google just did. And it's $32 billion, which is wild when you look at the rest of the world. That EY report just showed Southeast Asia is totally shifting towards smaller acquisitions and minority stakes. Deal values are dipping there while we get these massive American mega deals.
Right, like Grab picking up Foodpanda's Taiwan business for $600 million. A nice, sensible mid-market snack.
Exactly. But if $32 billion for cloud security gives you vertigo, let me offer you something incredibly grounded. Literal glass.
Yes, Apollo buying Nippon Sheet Glass. $3.7 billion enterprise value. The former banker in me loves this deal so much. While everyone else is fighting over AI startups and burning cash, Apollo just buys the company making the physical windows.
I dug into the Nippon filings. It's not sexy. It's just steady, boring, beautiful EBITDA. They have real, tangible assets.
Notice the contrast here. Google pays $32 billion for invisible software shields. Apollo pays a fraction of that for actual physical shields. And private equity is just having a weirdly anatomical week overall. Olympus Partners is offloading the retina business of EyeSouth to Cencora for $1.1 billion.
Eyeballs and windows.
Private equity is really focused on vision this week.
That was terrible.
I stand by it. It plays.
You really shouldn't. But speaking of vision, Gilead is suddenly looking very closely at inflammation. The whisper number on their Ouro Medicines buyout is $2 billion.
We should see an official announcement on that tomorrow, but wait until you hear what Blackstone is looking at. Put down the tech multiples and the glass factories. We need to talk about global cricket.
The bug or the sport?
The sport, Maya. And Estee Lauder might be trying to buy a Spanish beauty empire. Let me pull up the Puig rumors. Voices.
So Equitech just put out their global buyers report, and surprise, surprise, the market is suddenly getting cold feet on AI targets.
I wouldn't call it cold feet. They're just actually doing due diligence now. For the last 18 months, if a pitch deck had the letters A and I next to each other, someone was throwing $50 million at it.
Exactly. Now Equitech is saying buyers are balancing enthusiasm with careful diligence, which is polite advisory speak for realizing half these startups are just OpenAI wrappers with a nice logo.
Oh, come on, that's way too cynical. There's real proprietary tech getting built.
Name 3 that actually own their foundational models and are up for sale right now. I'll wait.
Okay, fine. Maybe some of them are Claude wrappers, but the caution is healthy. It actually mirrors that EY report that dropped this week on Southeast Asia. Everyone over there is pulling back from global mega deals and pivoting to smaller minority investments. It's a total vibe shift across the board.
A vibe shift? You're a former investment banker, Nate, not a TikTok trend forecaster.
Hey, I read the cultural tea leaves. Speaking of vibe shifts, the alcohol M&A market is officially hungover.
I was reading that note. Oversupply from producers, plus consumers are just drinking less. The entire sector is cooling off rapidly.
Right, but I love how the market watchers are spinning it. They're calling this massive reset a long-term opportunity.
Which just means valuations have finally crashed hard enough that private equity can swoop in and buy up distressed distilleries for pennies.
Buy the dip, maybe throw in a zero-proof mocktail brand just to hedge your bets.
It's not the worst strategy. But speaking of placing massive bets, we need to talk about what Gilead Sciences is planning for tomorrow morning.
Oh yes, $2 billion on the line for Ouro Medicines. Spill the tea. I am telling you, the whispers out of New York are getting loud. Estee Lauder is supposedly knocking on Puig's door.
Wait, really? Puig just went public like 5 minutes ago. The ink on the IPO is barely dry.
Exactly, but the beauty bankers are bored and Estee desperately needs a win. They want to create this massive new beauty giant.
I totally do not buy it. Have you looked at Estee's balance sheet lately? They cannot afford the massive premium Puig would demand right now. Plus, the Puig family still controls the voting rights. It makes zero sense.
You are looking at the math, Maya. You have to look at the ego.
Ego does not get past the credit committee, Nate. I need to see a term sheet before I believe a word of that.
Fine, but tell me you buy the Blackstone cricket rumor.
The Global Cricket League stake? That I actually believe. Private equity is obsessed with live sports right now.
It is wild. They are evaluating a huge stake. I can just picture these Blackstone partners in their fleece vests trying to figure out what a wicket is.
Oh, come on. They hire first-year analysts for that. The partners just look at the spreadsheet where it says recurring broadcast revenue.
True. Speaking of broadcast, word is Sony is inches away from a $1 billion home entertainment deal with TCL.
That is actually interesting. Sony has the premium content and TCL owns the affordable hardware market. But $1 billion feels light if it is a true joint venture.
Spoken like a true skeptic. It is probably just a glorified licensing play disguised as a strategic partnership.
I will reserve judgment until I can read the actual filings.
We'll get your highlighter ready because we have a fully baked $3.7 billion buyout to talk about next. Apollo just bought a glass company.
Nippon Sheet Glass. Now that is a deal structure I cannot wait to rip apart. Tomorrow's radar.
I am keeping my eyes glued to the wire tomorrow for Gilead. That $2 billion Ouro Medicines buyout has to be dropping any second.
$2 billion for an inflammation portfolio that barely cleared phase 2. The premium there is exactly why pharma M&A is completely detached from reality right now.
Oh, come on, you know how the patent cliffs work? They are buying time, not just drugs. It is a necessary insurance policy.
An incredibly expensive one. I am actually watching Perfect Corp tomorrow. Word is they just formed a special committee to evaluate a going private proposal.
Wait, really? The AR makeup tech guys?
Exactly, which completely contradicts the Equitech report today about buyers running away from AI targets. Diligence is supposedly freezing up those deals entirely.
Unless someone sees the bottom before the rest of the market does. Kind of like the gossip today about Estee Lauder wanting to swallow Puig, or Blackstone sniffing around the global cricket league.
You literally just wanted an excuse to bring up cricket.
I am a man of diverse sporting interests, Maya. We will see what actually hits the tape tomorrow.